let's look at that shilling. The Genghis Capital saying they see it as technically slightly overbought right now. They could see a correction, seeing a correction towards 85. But on the other hand, you still have the search for yield and generally an outlook that risky assets are in favor right now. What are your thoughts on where the shilling's going?
I think we're headed to essentially around the 78 level. I think, you can see since the beginning of the year, the high beta currencies have had an outstanding start. The rand, the zloty, the Brazilian real, the Indian rupee. And I think it's now spilling over into some of these frontier currencies, of which we're one. And when you've got an 18% CBR rate and near enough 20% one-year money rate, I think it's very difficult to be short the shilling. You've also got $600 million of a syndicated loan expected to hit the market imminently, which I'm sure will be converted into shillings as well, I think, which will further propel it higher. So I think we're looking at 78. It's been a meteoric rally since October 11, as you said, when we were at 107. And just on price, you would have had about a 24% rally. And then, of course, you've had this very juicy carry. And I think it's just impossible to hold dollars at this moment in time unless you really need them. The big fly in the ointment to that shilling bull story would be a surge in the price of fuel if there were a strike on Iran. But for now, that doesn't seem likely.
So that really a risk factor, but clearly you standing on the bull side of the fence when it comes to the local units. Let's just look at that World Bank loan that has been announced. The World Bank saying they could lend up to 128 billion shillings. That's for infrastructure projects, and that comes on the back of a lot of other money that the World Bank has already put into the Kenyan economy. What does this mean for borrowing costs from the government if the World Bank continues to support its projects going forward?
I think firstly the World Bank has clearly stepped up its game in Kenya, and I think that's part of a geopolitical calculation that Kenya remains the gateway to the region. And if we look at Africa's 4 poles, the East African pole is very much dominated by Kenya, and I think the World Bank is taking a bigger bet on that basis. In terms of infrastructure, clearly, infrastructure is very sexy at the moment. I can't remember a time when the CEO of General Electric set foot in Nairobi, and that happened last week. If you take foot traffic, we're witnessing very interesting developments. And I think essentially borrowing costs are just too high for the real economy to sustain. I know the situation around it and why we've reached this point in time, but it's going to be key now as to how quickly the central bank can bring borrowing costs down and I think maintain the value of the shilling. It'll be a tricky task. But essentially, I think there's enough liquidity now to start bringing the cost of borrowing down.
Do you think that we could have an interest rate cut as early as the second quarter of 2012? Or do you think that inflation isn't coming down as quickly as we need it to come down?
Given this extraordinary rally in the shilling since October 11 through today, clearly the transmission has not happened as one would have wished. And that's one of the risks in Kenya. It's a very sticky economy. The transmissions don't happen as they should. And you have a bit of racketeering going on. If you go and look at the prices in the shops, they're not reflective of what the import costs really must be now. So this is one of the risks. But having said that, I think you've got a wall of liquidity that's coming in via the loan and various other places, and essentially I think we're going to see a sharp reduction in interest rates and in the inflation rate. I'm looking for a rate cut before the end of the first quarter, simply on the basis that the real economy cannot take an interest rate regime which is above 20%. And what's essentially a cry is going to become a shriek, not unlike what we've seen in Uganda, where the central bank buckled under and gave a 100 basis point cut to the markets.
As you say, starting their cost-cutting cycle there and really buckling into the pressure that they saw from the people on the ground. Let's focus in on the equity markets.
Right.
Mumias' pre-tax profit for the first half, 4.5% growth there, 1.3 billion shillings it made, but it really seems like it was the cost-cutting measures that helped it return this number. What were your views on the first half performance?
I thought they were very defensive results. They cut about 250 million shillings off the marketing budget in order to make that eke out that small EPS increase of 3 cents. What worried me considerably was the sharp slowdown in sugar production. They're crushing less cane and they're producing significantly less tonnage. It was very marked. Normally there were about 110,000 tons for a first half. This time round, there's 66,000 and change. That's what worried me a little bit, because after all, it is a sugar business. And if they're not processing enough sugar, it raises alarm bells in my mind's eye. However, with Mumias, there is a strong medium-term story, the ethanol story. They're looking to extend their sugar-growing region near the Tana Delta. That's still on hold. I don't know what's happened there. But essentially, I thought these results were a little bit light, and management had to play some serious defense to eke out a half-year-on-half-year gain.
It looks like they also could be looking to acquisitive growth, as you say, their production falling for the first half, but looking to buy up some of the smaller sugar producers, as you say, also looking to expand their production towards the coast. So that could be a positive in terms of helping to get that revenue up and going again.
That's what I mean. I think the medium-term story it remains interesting and it remains constructive, but near-term I was quite disappointed in those results. And also bear in mind, these sugar companies of which they want to acquire, we've got a coalition government, we've got an election coming up. There's nothing going to be for sale now through the end of the year. I can't see it happening really. Yeah.
Let's look at the sectors really. 5 of the 10 sectors moving deep into value territory. Just looking at the relative PEs right now, agriculture and insurance sector, they're trading on PEs of around under 4, whilst the manufacturing sector sitting with a PE of around 15, construction sitting with a PE of 10. What are your views on the relative valuations that we're seeing across the sectors right now?
That's an interesting question. I think, with the big blue chip counters, which are on the radar of international investors, you're always going to have to pay a premium to the much smaller counters, the more esoteric parts of our market. And remember, there have been issues in the second tier part of the market around corporate governance. CMC remains suspended. We had the problems at Portland Cement. So you've got a bunch of issues which are creating these valuation differences. But the big story, I think, remains this, is that international investors are underinvested in sub-Saharan Africa. They are beginning to increase their weighting. You've seen this phenomenal first month rally in South Africa, a huge rebound in Egypt. And I think there's plenty of money on the sidelines for the big counters. So that premium will maintain. The question for the tier 2 stocks is, how quickly they really get with the program, understand they've got to improve their corporate governance better, and also understand that at the end of the day, they should be aligned with their shareholders. That alignment has been missing. I am hoping that the change, the trajectory, the more aggressive CMA will finally buckle these folks under, and we should see some outperformance also coming out of tier 2. But we're going to have to wait a little bit for that, because we're still in a moment of intense volatility around how these companies are managed.